Hello and welcome to the special conversation. The budget has delivered many taxation changes. So what do these changes, whether it is in capital gains, whether it's in the securities transaction tax, or whether it's in the manner in which buybacks will now be taxed, what do all of them mean for us, the individual investors? Well, to help us answer these questions today, I have with me Pranab Uniyal, Head of Investment Advisory at HDFC Securities. Pranab, great to have you on this call. Thanks for joining in. So rarely do we see a budget which is so intensive when it comes to the capital markets, right? So I want to make this conversation very simple and take it step by step. Let's first start with the hike in STT, right? It was all aimed at curbing speculation in the F&O market. What do you think will be the impact?
Yeah, no, thanks, Subhi. And first of all, delighted to be here. No, I agree. Most of the budget just come and go, and all that we have to declare about them is non-event, right? So this time it's been a significant event in terms of things to track or keep track of. So with respect to STT, I think the intention of the government, obviously, and we've all been hearing about it for quite some time, is to kind of curb down on the retail trading F&O activities, right? So we all know the severity or the extent and the apprehension that the government, the regulator has. So from a tax collection point of view, it honestly doesn't, I don't think, moves the needle for the government. It's more to do its bit on let's say making it slightly less attractive, and then of course the ball goes to the regulators court, which is SEBI. Now what's happened obviously is the STT for futures has gone up from 0.01 to 0.02%. For options it's 0.06 to 0.0625 to 0.1%. The impact, if you ask me, obviously would be there for a future transaction. It obviously doubles up in terms of, let's say, the price, 50-60 rupees per contract. But the bigger point is in terms of understanding the impact on the behavioral trading or behavioral aspects for the client. Do remember that here we are in this country in calendar year 2023, or the close to 100 billion contracts traded in the world. Indians contributed to close to 80%, right? So and the other tidbit obviously is, of course, like SEBI has been declaring it for quite some time, that almost 9 out of 10 investors lose money in F&O, right? So a little more because of STT, I would really doubt would deter the investors because it's more to do with their behavioral pattern and not just really the kind of income they're about to, or they're able to actually derive out of these transactions. Okay. So the sense is that yes, of course, it's a bit of an impact. Interestingly, Surbhi, I think the impact would be more on institutional investors who do a lot of high frequency trading, a lot of arbitrage, etc. Because when you're dealing with thousands of transactions in a day, the impact of STT on an arbitrage or a market neutral trade can be quite high.
No, absolutely. And we got that feedback from some other experts as well, that maybe for people who manage arbitrage funds, this could be a bit of an added headache. Take that point. Okay, so right. That's STT. Now let's talk about capital gains. Big changes there. Right. So while we all know now that listed equities long term has gone up to 12.5%, even short term is now 20%. So that's the obvious one. Tell us your thoughts there. But also, Pranab, I mean, you look at investment advisory across the board, right? These tax changes mean pretty significant changes for mutual funds as well, particularly hybrid funds that have a bit of everything, a bit of gold, a bit of equity. So just break it down for us in terms of what the average investor should remember and take away from this.
Sure. Again, I think I would look at it as a budget which really does its bit in terms of simplifying the whole landscape. And in that sense, in my mind, there's, let's say, more of good news than bad. Of course, on the equity side, both on stocks as well as equity mutual funds, the LTCG has gone up from 10 to 12.5. STCG has gone up from 15 to 20%. Now there, again, as an investment advisor, what we have to remind the client is that in a way, it strengthens the kind of investor behavior that we should anyway be expecting out of investors, right? To be honest, increasing 10% to 12% hardly moves the needle with respect to long-term capital gains, but it does deter or penalizes the short-term trading or short-term capital gains. So from that sense, we would only reiterate to the clients that it does make sense to stay invested for long term, because it's not only the, let's say, additional 5% STCG that they'll incur, but also the compounding loss that they will bear, or compounding that they will lose out on the long term, right? Other than that, Surabhi, you mentioned about the other investment, let's say, instruments. Again, credit to government to actually give a lot of clarity, make it extremely simple. Unfortunately, a lot of funds like gold ETF, FOFs, overseas FOFs got clubbed with debt funds when in the last year's budget. So from that sense, they suffered for a year, but with the taxation now being changed to 12.5% for long term, and the long term being 2 years, there is going to be a bit of interest back into these instruments. To be honest, gold ETF being taxed at the maximum marginal stood no chance against other investing opportunities. Now, for a country which invests close to 1,000 tons of gold, there can't just be one sovereign gold bond in terms of a tax, let's say, optimal instrument. There has to be many more instruments. So that's a right step in that direction, to offer that optimal taxation on gold ETFs. And again, on hybrid also, given that, again, very, very simplified, it's more than 65. It's the equity, it's in the equity taxation more than 65, debt taxation, everything else pretty much becomes like what I mentioned, for more than 2 years, it's long-term capital gains. So a lot of simplification. It will encourage, for example, looking at overseas funds, which again, given the earlier taxation we bore for a year, did not make too much sense. So from that sense, I think, and again, looking at it a little holistically from an investment advisor point of view, Surabhi, is the fact that equity valuations at where they are, we also have to remind the investors that look, they need to diversify across into other asset classes. So again, this comes at the right time, right? And with gold customs duty, effective customs duty going down from 15 to 11%, it incentivizes investor to look at gold as well.
Oh, absolutely. I wonder what the investor will choose, physical gold or those gold ETFs, because there's good news on tax on both fronts, right? Pranab, this has been a very helpful conversation. Thank you so much for joining in, and we look forward to more such interactions in the future.